You've seen several cycles of the kind that we are seeing today, where a certain section of the market is going through a bit of a bear run, so to speak. This keeps seeming to happen all the time, periodically, because equity is not a linear kind of an asset class. What do you tell your clients at this point of time? Are they panicking? Because we keep talking about maturity coming in investors where they're willing to stay put even if they are seeing a fall. Is that really true on the ground? And what would you tell investors to do if you have a portfolio of mutual funds right now and you're not necessarily seeing just those 4 or 5 stocks doing well? What should you be doing? Is buy right, sit tight a good strategy to adopt at this point?
It always is. I think if you have the right allocation in the right asset class and the purpose of the investment is met with the perspective of the period you are doing the investment for. Just to make it more simpler, if you are buying your equity assets and it's meant for long term, there is no reason why I need to prune or change my portfolio if I have bought the right stock or have bought the right fund. It's all about the patience, and you have to hold that investment for the right period. And that's why we say the percolation period of equities is actually long term. And that's why we always say that the equities are meant to be a long-term play and not a short-term play. Short-term play is more of a luck. While vis-a-vis a long-term play, they will actually pay out you over a long period of time, provided you are able to have that riding that volatility period, which actually is the case. And equity is actually all about volatility. If you are able to ride that, there is no reason why you will not make inflation-adjusted return over a long period of time. Now, how do you define that long period? Typically, anything less than 5 years, don't look at a pure equity asset class. Do look at maybe a hybrid combination with some exposure, but pure equity with large cap or even mid caps and small cap have to be 5 to 7 to 8 years of investment period. Otherwise, the chances of losing money could be high. Mind you, it doesn't mean that an 8-year period guarantee you a return, but the probability becomes in your favor.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.